Overpaying your mortgage feels smart. It feels safe. It feels like the responsible adult thing to do. But your feelings might be lying to you. For many people, mindlessly overpaying the mortgage is a trap, one that quietly costs hundreds of thousands over a lifetime. Your feelings aren't maths, and the maths most people never see tells a very different story. I'm going to show you the one number that proves whether you're making a brilliant move or a massive mistake. And if you pay 40% tax, I'm going to show you a head start so big it doesn't feel fair. So let's get one thing straight. My job is to look at numbers, not follow gut feelings. And I watch people get this decision wrong every single day because they let emotion drive their decision making. Not today. Forget everything you've heard. Here's the one clean way to think about this. Overpaying your mortgage is a guaranteed tax-free return equal to your mortgage interest rate. Rate's 4%. Every pound you overpay earns a guaranteed tax-free 4% for the rest of the term. Why? Because that's a pound the bank can never charge you 4% on again. That's it. That's the number to beat. So the entire debate is one question. Can the same pound earn more somewhere else after tax and after risk? That's the game. Let's play it. We'll run 10 grand through 3 different people. Find which one is you. You locked in a cheap deal years ago, a beautiful 2% fix. Option 1, you overpay on that cheap deal, a guaranteed tax-free 2%. Your 10 grand saves you £200 of interest in year 1. Option 2, invest it, a low-cost global index fund inside a stocks and shares ISA, so the growth is tax-free. The long-run average for global equities is around 7%. Not guaranteed, but an average. So £200 guaranteed, or a potential 700. For most people with 10 years ahead of them, the maths is screaming keep the cheap debt, invest the money. Overpaying at 2% feels safe. Mathematically, it's expensive. So let's go back to reality a bit. You've just remortgaged onto 5%. Overpaying now earns a guaranteed tax-free 5%, £500 in year 1. Investing still offers a potential 700. The gap just shrank from 500 to 200. And to win that 200, you carry all of the stock market's risk. Suddenly, the guaranteed 5% looks very attractive. At this rate, there's no single right answer. It's about your tolerance for risk. Hate losing money? Overpaying at 5% is actually very rational, grown up, and it's a good decision. Long horizon and a strong stomach, investing still edges it, but it's not a blowout that it was on 2%. If you pay 40% tax, you are not playing the same game as everyone else. You get a 10 grand bonus. Path 1, take it as cash and overpay. The tax man goes first. 40% in income tax, 2% national insurance. 4,200 gone. You overpay with 5,800. Path 2, you salary sacrifice the whole bonus into your pension instead. No income tax, no national insurance. The full 10,000 lands invested. Side by side, 5,800 working for you or 10,000 is up to you. That's a 72% head start before your money even earns a penny on investments. That's not a tweak, it's a whole different league. And the rules around NI on salary sacrifice are due to tighten. This window won't stay this wide forever. The pure maths isn't the whole story. Overpayers get 3 hidden wins. 1, loan to value bands. Lenders price your remortgage off your loan to value. Cross below 80, 75, 60%, and the rate on your entire loan can drop. An overpayment that tips you over a band is a win the simple maths never shows. 2, the penalty-free allowance. Most fixes let you overpay about 10% of the balance each year without a charge. That's the bank's green light. Go past it, and early repayment charges might bite. 3, time. 200 a month extra on a 200 grand mortgage at 5% gets you mortgage free about 6 years earlier and saves you roughly 40 grand in interest. 6 years of your life where that money is yours again. You can't put a price on that feeling. It's up to you. It's what you want. So what should you actually do? Here's the checklist in order without any skipping. Step 1, get an emergency fund. 3 to 6 months of essential spending, easy access. This is non-negotiable. Step 2, take your full employer match. It's part of your salary. Leaving it is setting fire to money every month and chucking it into the wind. Step 3, kill expensive debt. There's no point earning 5% on the mortgage or a return while a credit card charges 25. Step 4, now and only now, you've earned the right to decide whether you overpay or invest. Is the rate near 2%? The maths leaning towards investing. Rate at 5%? Overpaying is a serious contender. Higher rate taxpayer, look hard at salary sacrifice before anything else. And remember, the secret option is do both. half to the mortgage for the guaranteed win, half invested for the growth. For a lot of people, that is the correct answer. Here's your homework, and it's for today, not tomorrow. Find two numbers. 1, your exact mortgage rate. 2, your lender's penalty-free overpayment allowance. With these two numbers, you can stop guessing. If you want blunt numbers-based UK finance every week, subscribe and I will get you to win the wealth game. Now go and find those numbers.